Hey there, Alessandro with Simple Option Strategies. Today I'll be sharing with you two 0DTE trades, one that I placed on Friday, November 5th, and the other on Monday, November 15th. I want to share both because one is a gain and the other is a loss. And I think that sharing a loss actually allows you to learn more than probably sharing a gain. This is really important because it's all about risk management. So I recently changed my trade plan to incorporate 15 wide spreads instead of 10 wide. And the reason I did that is because I wanted a little more distance from the market to better incorporate expected moves. Before we get into the video, I just wanted to ask you if you hit the like button, which will help me on my quest to help as many traders as possible make consistent, profitable returns. So let's get into the trade here. This is a picture of the trade day itself. So this is a graph of a 5-minute chart. And I usually use 1 minute and 5-minute charts. So on Friday, I entered the trade at 9:33 and the position was a 47.30, 47.45 call spread. And I got $45 back from the trade, or 45 cents times 100. So on this day, the market was pretty bullish. It was moving up. I remember we had some good positive COVID news, all right? And obviously the market went up, and I wanted to take a bear spread because futures had moved up already. And so the market was going to gap up. So that expected move was not going to be that much, right? Because the futures had already taken the market higher. And so that's why I decided to take the bear spread. So I put on the trade right at 9:33. And the reason I like to enter early is because you take advantage of implied volatility. So the premium prices go higher, and the longer you wait, basically the premiums are lower based on the market move, okay? So the market continued moving higher, and I placed another trade in the same direction. And this time I collected $1.10 for the trade. So I basically doubled down as the market went up. You know, I had some confidence that the market was eventually going to come back down. And you can see here by the end of the day, it actually did. But I didn't have the knowledge of where the market was going to go. And I just had to see what it was doing at this time. So you can see here that the market it did go up. It actually tested it again. And then it went higher. And so by that time, the premium price had gone up to about $2. We had a nice rejection candle here, and then after that, the market had a lower high actually, and then another lower high. I had looked at this area here, which is the 47.05 area, which was an area of resistance, actually support in this case because it was higher. And so you can see here that the market stayed around this area, wanted to go up, but then it was rejected again. By the time that it broke this area here of support, I was pretty confident that we'd make this a pretty profitable trade here, all right? So yes, after that, the market continued moving lower, and eventually I got out at 10 cents, which is I always place the trade. I always put in a closing order for 10 cents just to make sure that it's there. And I got out at around 112 for 10 cents, and the trade was over at that point. So actually, the P&L on this was I entered the trade at 45 cents. I entered another trade for $1.10. giving me $155 on this trade, and that's minus commissions and exchange fees. All right, so the trade was profitable. It was a great trade, so I was very happy. All right, so let's get into the second trade. So the second trade was the trade on Monday, November 15th, okay, and I'm showing you the 14th here because there's an area of support here that I had eyed, all right, beforehand. And in this case, I actually put on a put spread and I collected 50 cents at the open. You can see there right at 9:40, I waited 10 minutes, okay, 9:40 I put on this trade, and the market actually went up a little bit and then it started going down. So during this period of time, this is from 9:30 till about almost noon, right? The trade was actually becoming profitable. And I remember seeing the premium from 50 cents down to 23, so I actually was profitable at that time. But I always have a 10-cent close on the trade, and that's what I like to take in. But right after that, right before noon here, we had this really big drop. No news or anything, it just dropped, okay? And again, I was eyeing this area of resistance, or actually support, and I just wasn't comfortable with the trade. So as soon as this thing went down, I knew that it was going to give me a bounce back up. And I decided to go ahead and take a loss on this trade for $1.15, which is a small loss, and make sure that I could trade another day, all right? So keep in mind that this trade here was 46.60, 46.45. So if the market had gone down further, and it could easily have done that, you don't want it to breach 46.60 and even go down through that, because that's where you end up getting large losses, and that's not a good thing. Okay. Even though it was a loss, it was still a successful trade because I avoided a very large loss. So I put it on for 50 cents. I closed it for $1.15, giving me a 65-cent loss or $65 loss. Small losses are good, big losses are not good, and that's what you want to do as a trader, especially with 0DTE. All right, hopefully this was of value to you. Again, hit that like button if you enjoyed this video, and we'll have many more like this coming in the future. All right, thanks.